Hey everyone, it's Ben Hardy here, and in today's video, we're going to be discussing the car repo issue. And well, the deeper I dug, the scarier things got. That's all I gotta say. Before we get in this video though, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And if you want to see more content like this, I recommend you subscribe because I post videos every single day. Let's get into it. So let's talk about the car repossession issue that we are experiencing currently. And first off, thank you to everyone that suggested that I discuss this topic because I didn't realize that it was as scary as it actually is. So first off, let's go over some numbers and then kind of dive a little bit deeper. So in a normal market, if everything is going perfectly well and everyone's paying their bills, then we might see about 1 million repossessions per year. And again, that's like the best possible case scenario. Now, what typically will happen is we'll be between 1.5 to 1.8 million repossessions per year. Right now, we're at over 2.2 million repossessions in terms of our rolling yearly average, and it's only increasing as the months go on. And so that's why this situation is getting pretty dicey. Let's talk about who is actually getting their cars repossessed. So people with subprime credit, aka not so good credit, are getting their cars repossessed at a slightly higher rate, but it's not a huge increase. The group that is getting their cars repossessed at a much higher rate is people with prime credit, aka good credit. And the repossession rate for this group of people has more than doubled. We have to ask ourselves, why is this group of individuals that has good credit having their assets repossessed? Because again, if they have good credit, that means that they're good at paying things off and they're not likely to have things repossessed. Well, it's for a number of reasons. First off, generally speaking, people that have prime credit typically make more money than the average person. And what has happened over the last few months is a lot of these high income jobs have been disappearing because there's been a lot of layoffs at large tech companies and other large firms that have these, salaried positions that again have very large salaries. And so you have a lot of people that were making a lot of money and now all of a sudden they're not making a lot of money. And then we have just what's happening in the market, right? The market has just been an absolute poop show for the entire year of 2022. I mean, there have been some ups, but there have been a lot of downs. And so you have a lot of industries that, again, support a lot of high income individuals that generally have good credit that are doing really bad this year. And so that means these individuals aren't making as much money. And so they're not able to pay their bills like they were in the past. What you might be thinking at this point then is, well, these people either were making more money or they, aren't making as much money as what they used to be, but they're still making good money. And if they were making all that money, they should have money saved up, and that's not the case. So right now, the US savings rate has pretty much stalled out. It's right around 3.5%. Sometimes it goes up, sometimes it goes down, but it's not massive. The average person doesn't have all that much money saved up. And there have been several surveys that I've seen over the last few weeks where they'll go and survey people that make $200,000, $300,000, $400,000, $500,000 a year. And a large portion of those people will be living paycheck to paycheck. And it reminds me of a term that we used to use at the dealership for people that would make a lot of money and spend a lot of money. And that term was eat big, shit big. And that is what we are experiencing right now. Is there was a lot of hype over the last couple of years because there was a ton of stimulus. Everything was going up, right? Cars were going up in value. The stock market was going up in value. Housing prices were going up in value. And so a lot of people over speculated and they over leveraged themselves because money was very, very cheap over the last couple of years because interest rates were literally set at zero within the Federal Reserve. And so with all this over speculation, you have a lot of people that are living well beyond their means because they're like, okay, the money just keeps coming in, so I can just keep spending. And now that we're experiencing a year that's actually, even though it's seemed really negative, it's a little bit more normal. It's really bad for these people that were spending all this money. And so that leads us into why these people that have really good credit are having these vehicles repossessed. It's simply because they are way over leveraged. They just dove way too much into the hype scene in the end of 2020 and all throughout 2021. And now they're starting to feel the pain because they're realizing that the money tap has been turned off. Now, with these prime credit borrowers, these high income earners that are having their assets repossessed, what is this going to do to the overall market? And again, quick disclaimer, I am not an expert when it comes to the housing market or the stock market. I own a house and I invest in the stock market and into cryptocurrency every single day. And so that is my expertise in those two fields, which is like this much. But based on the research that I've done and what I see day to day, because I'm constantly looking at both markets, I'm assuming that if you have the group of individuals that is typically investing into both of these types of assets to now be in trouble and basically having assets repossessed or having to start to sell assets at a massive discount just to get out of all this debt that they've put themselves in, we could potentially see some downward pressure on things and just overall volatility, right? But let's move from that into the car market, because again, that's what I know a lot better. What I'm seeing within the car market right now is that luxury cars are declining at a much more rapid rate compared to the overall market. And so what it's looking like right now is everything that is sub $50,000 is still declining, but the rate that it's declining is not horrible. Now, once you go from $50,000 to $100,000, the rate is slightly more. It is very dependent upon the product. There is some product in that price range that is just really hot still because there's a lot of hype behind it, but the general trend is there's a little bit more decline. Now, once you go over $100,000, this is generally when you get into luxury cars and high lines and all that, and this market is just completely on fire right now because, again, you have all of these individuals that have loans on these cars and now they're extremely underwater because these cars have experienced more depreciation than any other category over the last few months. And so they're just trying to get rid of stuff at this point, and so they're flooding the market. I think a really good example that I've seen in real life is I filmed for a Mercedes dealership here in state, and before this whole like market collapse thing started happening, when I went to the dealership, they would have like maybe 1 or 2 G-Wagons at the store. It got to the point where they had like 10 plus G-Wagons because everyone was trying to get out of them because the prices were declining at such a rapid rate. And most of those G-Wagons were actually under consignment, where the dealership was selling the vehicle with the owner, because if the owner traded it in, it would be so horrible. So they had to do it in a retail deal so they could capture as much money as possible to mitigate the massive loss. And so what we're going to see with the car market is we're going to see some more downward pressure, especially on luxury cars. And so if you're planning on purchasing a luxury car, then I would probably hold back and wait a second, because the market has a little bit more to, well, more than a little bit, a lot of bit more to decline, and you could potentially see some deals on some pretty exciting luxury cars in the near future. The last thing that I want to touch base on is the fact that it is too early to really tell how catastrophic this whole situation is going to be. Because like I said earlier in the video, we're at about a rolling average of 2.2 million repossessions per year, which is high, but it's not the highest that we've been in the last 5 years even. And so until we get into like the 3 to maybe 4 million range, again, it's just a little bit too early to tell. So at this point, I'm just going to have to put my little Ben Hardy car heart monitor on another situation and just kind of see what is happening. And if there are any updates that come up, then I will make another video on the topic. But I want you guys to let me know what you think about this whole situation, and you know, what you think is going to happen in the future. If you guys want my personal guess, what I think is going to happen is, yes, we're going to have a little bit more repossessions compared to what we have now, but I don't think that the overall market's going to collapse. I do think that we're going to see a huge downside in the luxury market. Again, we've already seen a huge downside, but I think that it's going to continue. But something else that kind of needs to be mentioned is a lot of these high income individuals are just going to take this as a huge write-off and go, hey, I don't have to pay as much taxes because I lost so much money on vehicles. And so it actually might be something to offset all of the gains that they made over the course of 2020 and 2021. And so there are probably a lot of individuals that are pretty much going to just wipe off their hands and then just move on with their lives. But there are also a lot of individuals that are going to lose everything, and they're going to have to completely reset their lives, and then they will understand that, you need to eat big and, well, I'm not going to swear again in today's video because one swear is enough. Poop little. So anyways, I'll see you guys.